we are entering potentially a new regime for factor and therefore market leadership. And that is something which investors aren't really talking about, especially at a time when they're still very much wedded to the AI narrative. Okay, we're into August. We've got through earnings season that was incredibly robust. We've had a CPI print that didn't scare anyone away. And also we've had an AI narrative that's continued to hum in the background with various data points driving investor enthusiasm. But we really want to focus on one theme alone, and that is quality. And when we talk about quality, we obviously mean businesses that have high ROE, have strong balance sheets, and have stable earnings expectations. This is a factor that has been beaten up spectacularly over the past year. And in fact, in 2025, it had the third largest drawdown in its factor history on a rolling one-year basis. So that in itself piqued our attention a couple of months ago. To extend that narrative one step further, we actually noticed that quality has become very correlated to value, i.e. it is cheap. And simultaneously, it has become very negatively correlated to momentum, i.e. it is out of favor. And if you actually overlay these different dynamics together, what you find is that there is a statistically very high chance of quality rallying over the next 6 to 12 months. And so that would be around about 80 to 85% hit rates and around about 6 to 7% positive return. Doesn't sound very spectacular, but what it does mean is that we are entering potentially a new regime for factor and therefore market leadership. And that is something which investors aren't really talking about, especially at a time when they're still very much wedded to the AI narrative. Now, just to be clear, this doesn't necessarily mean that the AI narrative goes away anytime soon, but what it does mean is a few things. First and foremost, it probably means that momentum after the big drawdown that we've seen in recent weeks probably doesn't actually rebound. And that's something which we've been talking about for a few weeks now. The second thing is that within quality, if indeed it does actually begin to rally further from its nascent recovery in recent weeks, then it probably means that we're going to have a change in market leadership. So that could manifest through any number of things, such as Russell begins to underperform, or parts of the unprofitable tech complex linked to AI begins to also underperform, having had a pretty stellar rally earlier in the year. And it also could mean that you actually get a change in sector leadership too. So rather than tech taking the mantle of leadership, it could, for example, go to financials, which is the sector that has the highest positive correlation to quality. So although there's a lot of topics that need to be unpacked here, and we don't really have time for all of that right now, the main message is that market may be going through a bit of a regime change. And if that is indeed the case, then investors probably are not correctly positioned for that. So the conclusion here that investors may want to consider rotating into quality. And although that may not be a foregone conclusion, we do have the hit rates and statistical observations that make it relevant enough to talk about. And of course, within the backdrop of the midterms looming in November, it may be the exact catalyst to get investors to start thinking about a slightly more defensive posture. That's your morning matcha with Alty. Good luck trading.